is part 3 of the webinar series. Now this I'm going to keep as short as possible. I trust that you've watched part 1, of course, and I trust that you did take the time to watch the lengthy part 2 because it makes this the best picks to the downside I have for you right now. It makes more sense. Now I began the research for the stocks I'm going to highlight here, began with this long list of stocks. I went through all of them one by one, and I managed to reduce the list to the following. So the list was cut down slightly to this list here, and then I managed to reduce the list to the stocks that I'm going to mention here in the next couple of minutes. So the first one is ACN, and this is, I like this one to the downside because you can see we already saw failed breakout here, moved up, failed there. So that was the first indication to go short the stock there. Of course, since sometimes there's so many stocks moving, you can never find the stocks at the ideal time every single time. But I see now that it came here, made a low there, right there, and I like the fact that the 10-week moving average is just about to undercut the 33-week moving average. So the crossover is about to take place, and the entry point on this one on a weekly basis is going to be at 71.96. And the reason why it's 71.96 is the monthly chart here has a better entry point. Now this is the RSI. The RSI is very close to a 3-year low there. This is what I like about this. It could make a 3-year low. This is the lowest monthly close here, and so your entry point is the next time you see this stock move below 71.96, you want to go short the stock. Short the stock there. I would say my price target is in the 40s, higher 40s, somewhere around here. That would be my price target in the next couple of 3 months to 6 months. So a break of that trend line there, 71.96 is that monthly closing high. It's 2 months above that level. If it breaks back below that, you want to go short. I think the RSI is going to make a 3-year low, which is what we want. And also the MACDs should also have an opportunity of moving to 3-year lows. And that's why I put this as the first pick. So the MACDs are already trading very close to 3-year lows, and we have a crossover here. So I think the momentum is to the downside. To take a look at ACN. The other one on the list here is an ETF. It is the IYR. Now anybody who knows my portfolio, now that you're subscribers, you are aware of my portfolios. I own the DRV, which is 3 times short the real estate market, but I recommend investors to own this one just because it's less volatile, the SRS. The reason why I've been negative in this space for a couple of weeks is because, as you can see here, we are very close to making a 3-year low here on the RSI, very close to making a 3-year low. Also the possibility of moving below 50 on the monthly RSI is very high, so that's why I'm looking at this as a short candidate. Also the IYR is very close, if not already trading at 3-year lows on one of the MACD settings, and we have a crossover here. So I think momentum still remains to the downside. On a weekly basis is where we see our entry point. Notice that we had a breakout there that has failed. So our first indication that this was in trouble was this failed breakout there. All right, we came and made a low there, so there was another sell point, and that sell point here was at a price of 63.82. This weekly closing low there. Stock went up for a couple of weeks and then broke down. So this was another place to go short right there on the IYR, which means real estate could be in trouble. And so it's made another low there, and this could be another entry point. It is 61.81. Whoops, 61.81. So if it breaks back below this level here, that's going to be a fresh entry point to the downside. The MACDs have already crossed over, so now we are looking for this to continue pushing lower. As they push lower, every opportunity to short this stock should be in play. Every time you see a break, like there was a break there, go short. If we get another break below 61, 81, you want to go short again the IYR. Next on the list here is for PHI, and it is, as you can see, we're going to go straight to the crossover which is taking place right now. So this is an entry point possibility. The lowest close before this crossover was here, and it is at a price of, let me see, 63.64 here. Whoops. So if it, now that it's breaking below that 63.64 price level on a weekly basis, you can still short this stock. My price target would be, again, for it to lose, I'll call it here, just test these lows here. That will be my initial price target the next couple of 3 months to 6 months. But a break of that point is what I'm looking at. Let's take a look at the monthly here, and you see that we are very close to making a 3-year monthly low there. And also you can see that this could also cross over on the monthly, the moving averages. Also notice that we have already met one of our main requirements, which is that we want stocks making 3-year lows. So this one is doing exactly what we would like to see when a stock is going down. The weekly means that this one is a short right now because it is breaking down there below that 63.64 level. This crossover here is very strong. The indication here is the only way this crossover takes place and continues separating here with the moving averages separating is if they continue pushing to the downside. Let's take a look at another one here. TSM. TSM is not ready to be shorted right now, but I'll show you how you can play this. Okay, so we had a failed breakout here. We had a move above this level here, move above that level, it would come back and break. Notice that level also became a short point there, short point there. So this stock has had multiple reasons to short this stock. Now, the one thing I noticed is that this break here, this low here, has been broken. This level, this general area here. The stock has not really closed above that weekly short point. So that weekly low was best time to go short here. We haven't really closed above that level. We are very close to that level. So I think as the stock fails to hold this $17 area and starts moving lower, that's indication that this level has held and the stock is going to be pushed lower. The ideal entry point on this one is when it moves below 16, which is the lowest weekly close going back to late last year. So this $16 level here, if you ever see the stock move below 16, you want to short the stock because it indicates that this crossover is continuing to take place and the prices are going to be pushed to the downside. So you can either use 17, this level here, where it's been stalling, as a top side to short it here and then here now. And if it breaks below this level here at 16, you want to get out. Let's take a look at the monthly, and you can see the monthly with a move below 16 could push the RSI, let me take that off, could push the RSI to 3-year lows here. Could push the RSI to 3-year lows there. So let's watch out for that break below 16. The MACDs are already giving us a good indication of momentum, as we can see that the MACD is already trading at 3-year lows, also about to move below 0, which is a sign of momentum to the downside. I want to take a look at the daily on this stock just to see what the entry point is, and you can see around 17, this level here also happens to be where you have the 50-day moving average. So if the stock starts finding resistance at the 50-day moving average here and starts moving lower, you want to short it before it breaks down below 16. I hope that makes sense. If not, you can always message me or call me and I'll try and explain it to you. The next one here is Six Flags. We're going to take a look at the weekly, and you can see Six Flags is showing a band of the 10-week moving average. That is my suspicion that the next thing we're going to see is a crossover here. So we want to wait for the next break of these lows on a weekly closing basis, and that is when it moves below, let me make sure I have the right price here, when it moves below 34.13. So if it moves below 34.13, which is this level here, 34.13, you want to get out. The monthly on this one shows that we could be moving to 3 all-time monthly lows. All-time monthly lows, very possible with a move below this level here. So watch this break here. That would push it to all-time monthly lows on 6 flags. Let's take a look at the MACDs. You see the MACDs are very close to 3-year or all-time lows, very close there and very close there. So I think if the stock can break below that level of 34.13, you want to get out. Let's take a look at the weekly again, and you see the thing I like about this is we have the possibility of a crossover between the 13-week moving average and the 34-week moving average, and you want to play this crossover. So the next break of these lows here, you want to go short. Okay, the next group of stocks is all what I call large cap stocks. You can pick any of this. They are all the same. All of them are the same. And the reason why I have them grouped together is because I didn't know which one to pick. There were so many that look the same. But I want to show you the ones that this is just one group of large cap stocks. Pick one of them. There are 4 of them. First one is Exxon Mobil. And if it breaks this level here, why? Because the crossover is already taking place. We have a failed breakout here already. And so if the crossover takes place here, the only way that crossover is successful if it breaks these lows, and the entry point on Exxon is 86.25, which happens to be this low here. This weekly closing low here is what I chose. If it breaks below that level, you want to get out. I want to share with you the monthly, because the monthly shows that with a move below that 86 level, the RSI could also break below this level here, which is not good for a large cap stock. I wonder what that means for the general market if that happens. And also notice that the MACDs are very close to making 3-year lows and very close to moving below zero. So take a look at Exxon Mobil if it can move below 86.25, and I'll have the exact price level on the summary. So 86.25. Okay, the next one, as far as the large cap stocks are concerned, is AT&T. Why? Because we already have a failed breakout there, and this has become the breakout. This failed was successful entry point there. It came back and failed, and this has become resistance now. This has become resistance. The fact that it's moving below $34 here is showing me that this crossover is starting to take place, and it's going to suggest that it's going to move lower here. All right, because you see the crossover can only take place if prices confirm with a break, which it's doing, and a continued push to the downside. Another way to look at this is the monthly and you see the RSI could break to 3-year lows there as far as AT&T is concerned. So a break of that level is not good. The MACDs should also be showing, already seeing the MACDs moving to 3-year lows and the possibility of the MACD moving below zero. So man, even AT&T looks weak if it can break that 34 level, which it has done. If it can continue moving low, I think the price target here for me would be somewhere here in the mid-20s, which is this lows here. That would be a test of this area. Let's take a look at another one here, and it is for Philip Morris. Let's take a look at the weekly first. The weekly for Philip Morris shows a crossover has already taken place on the weekly chart. We had a failed breakout there. That was our first red flag, crossing over of the 13-week moving average, red flag, and now it's moving below this level here. That's not good, which is at a level of 86.50, 86 53. So as long as it's below that 86.50, which is this weekly closing low, this thing could move lower. My price target, and this is sometimes a guess, is I'm just gonna call it somewhere around here in the 60s, which would be this breakout point. Maybe I'll call it in the 60s. Somewhere here would be my price target over the next 3 to 6 months. Philip Morris, as long as it remains below 86.53, is showing signs of breaking down. I want to take a look at the monthly here, and you see Philip Morris from a monthly chart. The RSI is already at 3-year lows on the monthly, which is absolutely bearish. And we also take a look at Philip Morris on the MACD's 3-year lows. They're already moving below zero. Crossovers already taking place here. Momentum still remains to the downside. I'm going to leave you with one more, which is one that I talked about and mentioned in my webinar. And notice that it is for IBM. There was a failed breakout. Couldn't even get to the breakout levels there. You can also look at this as a failed breakout of this level here. This breakout never held very well. We already have the crossover there. Entry point was at about 190, which was this low here. Once it broke below that level there, it's been to the downside like I predicted. And I think this one, my price target was in the 150s, 140s in the next 6 months, in the next 3 months. We'll see what happens. Now, those are the ideas I had for you. Now remember, the Exxon Mobil, AT&T, Philip Morris, and IBM, pick one of those because they are all just large cap, and I could not decide which one was, better than the other. IBM was just added for color, so forget about IBM. It's already moved since I first initiated it as a sell. Now, the other thing I do have to say here is I wonder what all these monthly charts for ExxonMobil, AT&T, and Philip Morris mean. If the charts are breaking down for the large caps, does it mean that the S&P 500 is also going to stall? I don't know. We shall see. Thank you, guys. I hope the ideas are good for you guys who trade options. Remember, if you don't trade options, you can own the SRS instead of shorting the IYR. This is Eric Mwade, the educational trader. As always, thank you for your business. And if you have any questions, shoot me a quick message, email me, or call me. You have my number. So let's talk to you guys on the other side. Peace and blessings. I am out. Mwah.